Hi, in this video we will do an example sum on journal entries for revaluation of assets and reassessment of liabilities. Let's go to the example. Example: P, Q and R are sharing profits and losses in the ratio of 5:3:2. They decided to share future profits and losses in the ratio of 2:3:5 with effect from 1st April 2019. The assets and liabilities are revalued as follows. So we have a few assets and a few liabilities which are given. The book value is given and the revised value is also given. We are asked to pass journal entries for the revaluation of assets and reassessment of liabilities, assuming there are two cases given. Case 1 says the revised values of assets and liabilities are to be recorded in the books, and case 2 says the revised values of assets and liabilities are not to be recorded in the books. So in case 1 we will have to do method 1 through the revaluation account, and in case 2 we need to find out the net effect, gain or loss on revaluation, and debit or credit the partners' capital accounts depending on whether it's a gain or a loss. We will begin with case 1. We are going to follow method 1. Case 1. Journal entries in the books of the firm. Date, particulars, LF number, debit rupees and credit rupees. Now instead of passing multiple journal entries, it is easier for us if we pass one entry to debit the revaluation account and another entry to credit the revaluation account. So let's begin by debiting the revaluation account. So the date is 1st April 2019. We'll debit the reval account. Now revaluation account is debited whenever there is a decrease in the value of assets and increase in the value of liabilities. So let's see those cases in these assets and liabilities which are given. Plant and machinery asset has decreased, we need to debit revaluation. The liability of sundry creditors has increased, so we need to debit the revaluation account. Those two are the only cases, so let's do that. 2. Plant and machinery account. The amount of decrease in plant and machinery is 20,000 rupees. 2. Sundry creditors. The amount of increase in sundry creditors is 30,000. Total, we will debit revaluation with 50,000 rupees, being revaluation account debited for increase in liabilities and decrease in assets. On the same date, we'll credit the revaluation account with the first item, land and building, account debited. The increase in land and building is 1,50,000 rupees. There's a decrease in outstanding expenses. The amount of the decrease is 15,000 rupees. And there's an increase in the value of stock by 5,000 rupees. Two, revaluation account 1,70,000 rupees, being revaluation account credited for increase in assets and decrease in liabilities. Now we find that the credit of revaluation is greater than the debit of the revaluation. There's a difference of 1,70,000 minus 50,000, which is 1,20,000, and this is the gain on revaluation. So we will transfer the gain on revaluation to the partners' capital accounts in their profit sharing ratio. So the journal entry for that, 1/4/2019, revaluation account debit, the amount of the gain 1,20,000 rupees to P capital account to Q capital account to R capital account. The old OPSR is 5:3:2. So this has to be distributed 1,20,000 in the OPSR, which is 5:3:2. So 60,000 against P, 36,000 against Q, and 24,000 rupees against R, being gain on revaluation transferred to partners' capital accounts in old profit sharing ratio. So this is the answer for case 1. When the revised values of assets and liabilities are to be shown in the books. So to be more precise, the values at which these assets and liabilities will be shown in the books are these revised values. Next, let's solve case 2, where the revised values of assets and liabilities are not to be recorded in the books. For case 2, we need to use the second method. And the first step in the second method is to ascertain the gain or loss on revaluation. We will end up with a gain of 1,20,000, a gain on revaluation. We know that because we've done case 1 already. But if we had not done case 1, how would we find out the gain on revaluation or the loss on revaluation? we would do it as this way. Net effect the things which we need to add and the things which we need to subtract. There's an increase in land and building. All this will come as working notes. It's not part of the answer. The land and building has increased by 1,50,000. We'll write it under add. There's a decrease in plant and machinery by rupees 20,000. We'll write it against less. There's an increase in a liability of sundry creditors. The amount of increase is 30,000. Increase in liability will come under less. There's a decrease in a liability of outstanding expenses. The amount of decrease is 15,000. That will come under add. And stock has increased. Increase in asset will come under add. The total of the add is 1,70,000 and the total of the less is rupees 50,000. So there's a gain on revaluation which is equal to rupees 1,20,000. The next step is to find out the gain and sacrifice of the partners. For P, old share 5 by 10 minus new share 2 by 10, positive 3 by 10. P has sacrificed. For Q, old share 3 by 10 minus new share 3 by 10, nil for Q, no gain or sacrifice. And for R, old share 2 by 10 minus the new share 5 by 10, negative 3 by 10, and R has gained. So let's go ahead with the solution. Journal, date, particulars, LF number, debit rupees, credit rupees. The date of change of profit sharing ratio, 1st April 2019. Now we have a gain on revaluation. So we need to debit the gaining partner and credit the sacrificing partner. R capital account debit. To P's capital account. For R, the amount of the gain, which is 1,20,000, into R's gain, which is 3 by 10, comes up to 36,000 rupees. And similarly for P, gain on reval into his sacrifice, which is 3 by 10, is 36,000 rupees, being gain on revaluation of assets and liabilities adjusted through partners' capital accounts. So this is the way we will solve the second case where the revised values of assets and liabilities are not to be recorded in the books. Since it's a gain on reval, we will debit the gaining partner and credit the sacrificing partner. In case it had been a loss on revaluation, we would debit the sacrificing partner and credit the gaining partner. Please remember that for this method, we are not supposed to prepare the revaluation account. We need to find out the net effect through the plus minus approach. And again, in this method, the values at which the assets and liabilities will be recorded in the books is these book values. So we've seen a comprehensive example for revaluation of assets and reassessment of liabilities, the journal entries under both the methods.